big story on the economic front, inflation spiking again and industrial production contracting in December as opposed to the same time the month previously. Sakshi joining us with both those big stories. Sakshi, make sense of all of this for us.
Well, it is a double whammy for our economy. Economists were, of course, predicting that inflation will continue to rise. However, they were not predicting dismal industrial output data. Now, like you said, inflation has come in at its highest in over 5 years, retail inflation. And so what is driving that higher at the moment, Ankita, is, of course, an uptick in food and vegetable inflation prices. Now, food inflation and vegetable inflation was also high in the previous month. So, therefore, this was something that was estimated. This was foreseen. Now, what has come as a shocker in the true sense is, of course, industrial output data. All economists we were speaking to early in the morning and through the afternoon were predicting a higher rate of growth for industrial output. Remember, in November, industrial output came at 1.8%. So, therefore, there were estimates that now it will either retain that path or it will move marginally higher. However, for our viewers to understand, industrial output has now contracted. That means it has gone into reverse gear yet again at minus 0.3%. And what is dragging this is, of course, manufacturing, a contraction in electricity, a contraction in capital goods, as much as 18%, a contraction also across consumer goods. So, all of this is weighing very, very heavily, especially when economists were estimating that there will be green shoots and economic revival at play, as there were lots of measures taken, lots of announcements made. But the reality on the ground is very, very disappointing at the moment.